Does anything spare the wrath of just the market hitting the flush? We know why. EU auto tariffs are basically being volleyed back and forth. We know that the China narrative around the tech investments or lack of what will be allowed, lack of tech investment in the U.S. is, of course, dragging the NASDAQ down. But, why wouldn't the Russell, by comparison, I wouldn't expect the market to be up on a day like today, but I am quite surprised the Russell is as weak as it is. So in terms of tendencies, I agree that the Russell is, number one, going to be, for me, the most resilient. But number two, I have to acknowledge that it's not going to be spared in environments like this. However, I still want to be opportunistic. So in the order in which I am most interested in the index futures, given the direction and the kind of news, on trade tariff good news, you're going to see that the Dow is going to benefit because it's the one that's being most affected. You're going to see moving with the Dow is likely going to be the S&P. We saw that Friday in a lot of ways, where it seemed like the markets wanted to breathe a sigh of relief around tariffs until this weekend came along and blew that narrative out of the water. So on a day where the market's selling off, I believe the best place to look for shorts, clearing range shorts, any kind of momentum short, is going to be the Dow and then the S&P. If and when we head higher, which I anticipate we will again, my expectation would be that the small caps and tech would lead the charge. The reason that tech has been hit so hard, again, the China news has absolutely hit tech square on the jaw, because that news would affect the ability of Apple, Facebook, Google, all those companies that want to make inroads in China. Those have just hit a major blockade. So we can see why tech is probably taking it the worst. But when you look at the RTY, and maybe some of you might be looking even at the IWM ETF, this is still a really good-looking trade. So let's talk about the pieces of this again. You look at a 30-point daily price movement range expectation for the upper end of a sell-off, not an extreme move, but a 68% probability move. It's a 30-point sell-off. So that takes that 1695 high, and you can see where it carries us. So we looked at a 1660, 1665 entry limit order to buy with a stop on the other side of the 34 EMA wave, which is the 34 EMA on the low. That's that exponential moving average colored in red. It's a 34 period EMA on the low. So if I'm in a situation where I feel the market's probably overreacted to a narrative, and gosh, that narrative's hit the tech market as well, Russell's the perfect place to sort of quote-unquote hide out in. That's exactly what we're doing with this RTY buy. So I like the ability for the RTY to recover because it really doesn't get as hurt by the tariff narrative. It's not really as hurt by the tech narrative, and it's going to be the most resilient in this environment. Strong dollar, trade wars, Russell will outperform the S&P historically. So this trade actually has not broken the wave. Unlike the ES and unlike the NQ, it's still intact. Therefore, the best looking trade that I've got going into the remainder of the week. I want to cover a few things in the premium video, and that's going to be a look at, and I've got my notes here from my my day with the group here at St. Simon Island, looking at the XLY, consumer discretionary, also the XLF coming into the bank result stress test. We're going to take a look at crude, as well as the current positions in silver and in copper, and also Boeing. I'm going to talk about Boeing. You know, when you talk about the Dow and whether or not there might be some upside to some of these stocks reaching these extremes, I'm going to talk a little bit about Boeing in the premium video as well. So tough day today for sure. Not because the pullback wasn't useful, but because the pullback just kept right on going. But it has held in the Russell, and this is the position that I like best going into Tuesday.